and welcome to the latest edition of Sharesify Talks Shares. I'm Ian Conway. With me today, as usual, my co-conspirator, Steve Frazer.
Hello everyone, how are you?
Good to see you, Steve. However, we've had a bit of a rocky start to the week, haven't we, with markets, US in particular.
Yeah, I mean, everything's fallen out of bed overnight, and it's all to do with this Greenland issue going on with Donald Trump and so on, and the fear that this could escalate into another trade war between the US and Europe, effectively. So investors in the US in particular don't like the sound of it. And he doesn't seem to have a great deal of popular support, from my understanding as well. So, but we have no power over that. It's just the way things go. But interesting to note that futures for later today suggests that the market isn't expecting any kind of bounce in the US. What's the UK market been doing?
UK is actually not faring too badly today, Steve, because it's full of miners. So you've got Rio and Endeavour up 5%. You've got Anglos and Glencore up 5%. All on the back of course, gold heading to another record.
All that glisters is not gold, but gold is glistering indeed. I mean, record levels for gold. Nearly $4,900 an ounce. I mean, it's been on such a staggering run. You go back to the start of last year. I mean, this is 13 months ago, and it was below $3,000, and that at the time. I remember talking to colleagues of ours at that time, and that seemed to be a staggeringly high price, and no one was really sure if it could stay up there. And now it's gone up 70% again over the last year. It's up 6% or so this week. It's just been amazing.
Yeah, thanks for reminding me. You're talking to the guy who sold out in 2024 because it wasn't going anywhere. Sold all his ETFs. I mean, it's not just gold though. Silver, other precious metals also going up.
Yeah, indeed. Of course, as I'm sure most of our listeners will know, they're not quite the same as gold, because gold doesn't really have any intrinsic use. I mean, it's jewelry or it's a store of value. Minor usage in industry, but not very much. Whereas silver, platinum, copper, other metals, obviously very much in demand from industrial sources. So you've got this lift in terms of the precious metal side of it, but also from the industrial side of it as well. So they're not necessarily like for likes, but silver's at a record, as you say, platinum's at a record as well. So it's gung-ho in the commodities world, it seems.
It really is. I'm pleased to say that as far as company reporting goes, because we're well into the swing of that at the moment, we've had some decent reports in the UK. You've had some pretty good tech ones, haven't you?
Yeah, I mean, it's not known as a tech hotbed, really, the UK, and perhaps unfairly so, because there are some interesting tech businesses, and one that's done really well recently has been Wise. So the old TransferWise, the money transfer business. It decided last year that it wanted to shake up its listing situation. So it moved its primary listing from London to New York, but it kept a secondary listing here. And it's just going great guns. I mean, its stock rallied 13% on its latest announcement. It was covered on our website at sharesify.com, and it just seems to be in a very sweet spot. However, I do know from writing about this sector in the past, it may also attract M&A. Some listeners may remember Earthport, which was another money transfer business back in 2019, I think. It got involved in a bidding war between Visa and MasterCard. It was eventually bought out by Visa. So interesting dynamics with Wise. See how it plays out. But it's a pretty big business now. $10 billion worth, I think it is.
Gosh, I hadn't appreciated it was quite that big now.
Yeah, it really is.
I've been looking at a few other UK companies that have had decent reports. In fact, I have to say, on the whole, it has been a decent week for reporting. We've had animal feed company Anpario. It's only a tiddler, but it is well followed by retail investors.
Yeah. And you made the really good point the other day to me about it's a bit of a kind of a similar in ways to Genus, which has done fantastically well.
Yeah, that part of the market, animal health is doing very nicely. Ashtead Technology is an interesting one. Subsea oil and gas services, not normally our market, but I had spied at the end of last year, it was one of the most shorted stocks in the UK market.
Really?
So came with a positive surprise, stock shot up. Worth saying, it's not part of Ashtead. It used to be, but it was there was a management buyout in 2008. So it is a completely separate company to Ashtead. And it specialises in subsea oil and gas services. Then we had DFS. We had a slew of consumer companies. We've had DFS, we've had CURYs, we've had Gear for Music, all very strong numbers. And also I'm just looking at Premier Foods, which has come out today. And I think expectations were pretty low because the company's come out and the stocks had a really nice pop on the back of it. Hasn't all been one way, unfortunately. We've had a couple of disappointments. Wetherspoons, where Tim Martin, and this is a guy who lives and breathes the business. He really does.
Doesn't he just? Yeah.
It is like a military machine. Spoons. It is run so there's so little fat on the business, and what they've seen is because they've had an increase in costs, because they're obviously very value focused as well. They run a very tight ship, and they've had higher than they expected energy costs, repair costs, national minimum wage, national insurance contributions. So he's basically had to come out and say, first half profits are going to be below last year. There's a good chance that the full year will be below last year as well.
We've had that kind of inflationary news recently as well, December year on year, and it seems to be a bit higher than the normal. So inflation is going to be a factor in a big business like that because it employs a lot of people. So the speculation will be that is that going to require big wage rises for staff and so on. So we have to wait and see how that goes. But I mean, there's a few other stocks on the market where you can go and get a roast dinner on a Sunday for under a tenner, right? So
I know, and I mean, you can see why it has legions of fans and why they're so loyal. The other one I would flag is Experian, which is credit scoring. So it's for individuals. If you want to know your own credit score, you can go to Experian. But most of its business is with banks and credit card companies, and it's basically trying to reduce bad lending, trying to improve the quality of their loan book. Now, most of the business is in North America, and obviously credit cards and borrowing is huge there. You only have to look at the JP Morgan and Bank of America results.
Yeah.
I think everybody was expecting the company to raise guidance, and it didn't. So unfortunately, the stock's hit a 2-year low today. And that's not just important for shareholders in Experian, but if you own Finsbury Growth Income, the Nick Train Trust, then it's the second biggest holding there. It's 11.6% of the portfolio.
Right, okay.
And on that, you want to watch out if you are an FGT owner. The next Tuesday, Sage results are out, and that is his number one position, 12%. Right.
Okay.
So fingers
been doing quite well,
fingers
actually,
crossed.
The Sage has been doing quite well in the last sort of 18 months or so. It had gone through a bit of a lull because it was having a bit of a challenge transitioning from on-premise to or a license model to a subscription model. But it seems to have largely got through that process now. So I'll be keeping an eye out for Sage results. Always an interesting one, and of course the only FTSE 100 tech really properly tech company in the FTSE 100. So worth looking out for. There's some other interesting results coming out next week as well, though, aren't there? Consumer. You mentioned Unilever to me, didn't you?
Well, these guys are coming out in a couple of weeks' time. What we're really interested in is what Procter & Gamble was going to say tomorrow. Because it's the world's biggest consumer products and health care company, and Reckitt is reporting in the beginning of March, but Unilever's middle of February, so not long to wait. And of course, as we mentioned before, having sold off the ice cream business, floated the Magnum ice cream company, it's now a much cleaner business to analyse. So there will be a read across from Procter & Gamble tomorrow. Also, I think tomorrow Intel and Visa will be watching.
Yeah, I mean, Visa's obviously always an interesting one to watch in terms of just consumer behaviour and so on, and also how well small businesses are doing, because Visa takes fees off everyone who uses their cards. So it's generally a bit of a bellwether for economic health. So one to watch. And Intel's been fascinating. It's had a really strong run over the last year or so. It appears to be getting its act together. We've mentioned in previous podcasts about what it's been trying to do, and recent comments from operators like chip makers like TSMC are suggesting that they just can't cope with the demand for AI chips. So I think the market will be looking to see if Intel, its production manufacturing side of the business, can pick up some of the slack from your Nvidias, AMDs, and all the other chip designers.
Oh, good heads up. Thanks, Steve. Well, on that note, we'll wish everyone a happy Wednesday, and please join us again for our next podcast, and head to the Sharesify.com website to check out all our stories, news and views.
And just before everyone leaves, if you've got any comments about the podcast, any questions, any suggestions, please drop us a line at editorial@sharesify.com. We'd love to hear from you.
Thanks very much.
Take care.